doing Joe Alta, and in this video I'll be showing you how to navigate the trading view and how to make analysis, technical analysis, like basic technical analysis. All right, so when you open your app, all right, you'll be asked if this is the first time like you're opening your trading view app. You just click on menu here, click on menu. This is the free version of trading view. All right, when you click on that menu, I'll sign out basically. So this is what it will look like for you, right? So when you just install the app and log in for the first time, this is what it looks like. Then you click on the menu right here and you sign in. I personally signed in with my Gmail, right? So you can click on this, right? Right, so I'm signed in, and you click on to add all these pairs here. You click on this plus sign at the top, click on it, then you write down the pair you want to add. So let's say I want to add USD JPY, then you can choose. I prefer this, all right? So choose that, and boom, it's there already. So this is how you add the pairs you want to analyze. That was how I added the rest here. All right, so we'll be analyzing this. So this is what these are the pairs I have on my watch list basically. All right, these are the pairs I have on my watch list. I don't do this USD. All right, so you click on it, you just tap on it. All right, then you tap on this here. Wait, this, can you see it? All right, when you tap on it, the chart will be opened. So on this chart, this is a time frame. This is where you switch time frames. All right, so when you click on that 5 minutes, you see these are the time frames. If you want to do the top down analysis, you can start from day 1, then you do your analysis, then you tap on it again, go to 4-hour time frame, do analysis. All right, so this plus sign right here, this plus sign right here, when you click on it, you'll be shown indicators, right, drawings, how to set alerts and compare and all this. All right, so this is what you need most of the time. I use this. Then for this pencil right here, this pen right here, when you click on it, to be able to see the tools you need on your chart. Like I use this, you need some, I use this, I use this, you need everything here basically. All right, so to bring it up here so you can easily select it, make it your favorite, you could just scroll down, then let's say we want to choose this circle, we want like this circle, we want to add it to our favorite. So you hold on it for a while, then you click on this star right here. All right, so you click on it and you add it to your favorite. You can see it's here already, circle. All right, so let's start the analysis. All right, so like I said, you start from the daily time frame. Like you want to know where price is moving to, right? So the first thing I will tell you before like trying to analyze is to know your trends. All right, I made a video in my YouTube channel about technical analysis. You can watch it. You need to know your trend. All right, so when it's going this way, Right, this is market structure. Sorry, market structure. Right, so this is a downtrend. In this scenario, you are looking to sell, right? You're looking for selling opportunities. All right, so this is a downtrend, and a downtrend is made up of um higher highs, this, and higher lows, this. All right, so like it makes higher high, this is the higher high, this higher high, higher low, higher high, higher low, higher high, higher low, higher high, and higher low. Then it makes higher high here. So this is what the downtrend is made up of. Now we'll draw the uptrend. Let me show you the uptrend. So this is the tool I use in drawing. Basically, this thing I'm drawing is the polyline. All right, so let's draw the uptrend. All right, so it goes like this, goes like this. All right, so it goes like this. Didn't draw it well, but we just have to make do with it. All right, all right, so in the uptrend, you have your sorry. Oh, I made a mistake. Sorry, I made a mistake. I'll show you where I made a mistake right now. It's in the downtrend. This here is the lower low. I mean lower high. Then this is a lower low. In a downtrend, it's low. All right, so I made a mistake initially and said higher high, higher low. So this is the lower high, lower low, lower high, lower low, lower high. Then in this scenario, this is the higher low, higher high, higher low, higher high. All right, so let me just try it. When you click on it, so that's just basically what it is. Uptrend. This is an uptrend made up of higher highs and higher lows. This downtrend made up of lower lows and lower highs, basically, right? So when you look at this, you see is in a downtrend, right? This is in a downtrend. All right, so let's move closer and see. So this here, all right, this here is a lower high, all right, and sorry, that's the lower high. This just this is the lower low. Then this is the lower high. This was meant to be right. Like in subsequent videos, I'm going to be like explaining why this is like this. All right, so um this is the lower low. Now let me zoom and show you something real quick. This is the lower high. Now, like you might be asking why this wasn't lower high and lower low. Like when you look at it, all right, it was meant to this lower low here was meant to break down, all right, but it didn't. It stopped here. It stopped here. And anytime this thing happens, all right, this high here would be taken by this one to continue the trend. So you might not understand now, but I just want to show you. You might be asking why this wasn't lower high and this lower low. It was meant to be a lower high if it broke this, but it did not break this, all right. It didn't break this down. It stopped at this level. It stopped here instead of going down and breaking this. So this, let me show you something. Let me zoom closer. When you look at these two lines here, this one and this one, you can see this is higher than this, right? Let's use this trend line to check, right? Let's see. You see, it's higher. Yes, it's higher. Can you see? So anytime this doesn't do like it fails in doing its job, the other high comes to take it out and continue the trend. All right, so this was basically a downtrend, and this is a downtrend. Let me change the time frame so it will be kind of easier for us to see the trends, right? So we can see the trends easily, right? All right, so this is an uptrend. This is an uptrend. All right, so this, sorry, this here, higher low, right? Then here, higher high, right? So higher high, right? And higher low, right? And higher high. So this is how it moves. Let me use this so it will be better. Low, higher high, higher low, higher high. It keeps going, it keeps going. Higher low, higher high, higher low, higher high, higher low. So this is just basically how it moves. All right, so we've gotten a market structure, right? And now let me just show you basically what you do. All right, so um you see these things moving like in a direction and changing direction. All right, so this extension down here like this extension is either called, like, let me expand. When you see it comes down like this, it's either called an expansion or an impulsive move. All right, it's an expansion, it's an expansion, it's an expansion. And when it goes back, it's called retracement or a corrective move. All right, so when it comes down, like I said, it's expansion or impulsive move. Then when it tries to go back, creating in this case a lower high, is a retracement or a corrective move. All right, and in trading there's what we call break of structure. All right, so for instance, this is Let's move left, 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 left. This is a downtrend. Look for a better downtrend. Yeah, let's use this. So this is a downtrend, right? This thing here, let me just mark this and then I'll explain. If you take a look at this place, you would see it was on an uptrend. It was making higher high, right? Higher high, higher low, higher high, went up, higher low. It was supposed to continue and break and go up like this to create another higher high. But guess what? It came down. Can you see? It came down. It came down. Well, it was meant to continue, but it came down to create a lower low, lower high, lower low. It changed. It changed the trend. So it was in an uptrend. It was in an uptrend. Then it changed to a downtrend. How do you know it changed? Alright, so how would you know a trend changed? So when you, like for instance, we mark this out now. This here was meant to be our our higher low, right? Then followed by a higher high. The next movement we're meant to see after this higher low was a higher high. But instead of going up, it started coming down. It started coming down until it broke this higher low here. Now this line coming down, breaking this this line coming down, right? It broke this our higher low here. So when it came down, it broke it. That's a break of structure. A break of structure, and when it's changing trend, it's called change of character. Alright, but when the trend is going up like this, alright, this is called, let me just show you the difference. Alright, you see, this is break of structure. Alright, so when it's going up, let me just show you something. Higher high, higher low. This is a high, right? Then this low comes up and breaks this higher high. This is what we call a break of structure. Break of structure, some people call it break of market structure. Now, for when it changed the trend, this is called, remember I said this move downwards is called expansion or impulsive move, and moving like this is called retracement or corrective move. Now, changing one trend to another is called a reversal. Do you understand? So it's called a reversal. Now, when it's reversing, when a reversal occurs, this is called, instead of calling it just a break of structure here, is called change of character. It's still breaking a structure, but it's going the opposite trend. This was in an uptrend, and this is a downtrend. So this here is called a change of character. Let me go again. When it goes like this, when it's in a trend, uptrend, right? Higher low, higher high. Then this is higher low, this higher high. We expect it to come down to form this higher low, right? Then after higher low, it goes up, it breaks this former higher high and creates another higher high here. Now, in this scenario, it failed to break this higher high in order to create another higher high. Then instead of this, it went down to disfigure this higher low here. All right, it came down. Instead of continue the trend, it changed the trend. This is a reversal. Now, in this scenario, I told you this is called a break of structure, right? But when it reverses, it's called change of character. Now, right, let me delete this thing here. Now, let me show you something. Whenever you see an impulsive move or an expansion, guess what this thing does? It leaves a reference point. And what is that reference point? Another block. It leaves another block and it creates imbalances. That's the two things an an impulsive move or an expansion causes, right? When it moves down or it moves up this way, it causes it leaves other block and it leaves an imbalance to be filled. Now let's take example for this one here. Remember I said this, let me change the color of this line so I'll be referred. See, this red line here is a change of character, alright? Change of character, and it can be called a break of structure in a downtrend. Now when this happens, alright, when it happens like this and it comes down, alright, behind it leaves another block and it leaves imbalances. Alright, so let me tell you what an imbalance is. So this is how an imbalance look. For instance, take a look at these candles here. Take a look at these candles. You can see, like when it forms like this, then another one forms close to it like this, then one might form close to it like this. No space in between the candles. But an imbalance is when spaces are left in between the candles. For instance, let me draw a candle like this and draw a candle like this and draw a candle like this. This is the first candle and this is the third candle. Now the space between this first and the third candle is called. On another scenario, let's take a look at some other candles. Take a look at this candle here. Let me zoom in. This is candle 1, candle 2, candle 3. You see, they all formed close to each other. But take a look at these second candles here. This candle here. Candle 1, candle 2, candle 3. They left spaces. In between. So can you see? So that's called an imbalance. Anytime an impulsive move occurs, alright, or an expansion, it creates imbalance. And I told you it creates an order block. Now, how do you recognize an order block? Simple. In this downtrend, a downtrend is also called bearish. Bearish is in a bearish movement. Let me write it so you get it. Right? Right, so okay. So when it's on a downtrend, it's in a bearish movement, all right? Bearish. When it's going down is bearish, and when it's going up, all right? I did this. When it's in an uptrend is bullish, all right? Bullish. Down, bearish, up, bullish. So bear that in mind. So when it makes this, like, okay, when it's on a downtrend, it's bearish, right? So all these black candles you see, let me show you something real quick. When it's moving up, right? When it's moving up, what candle color do you see? The white. But anytime it tries to move downwards, for instance, see, when it's moving up is white, when it's moving down is black. So this white candle, you can change the color to whatever color you want. For me, this white candle is the bullish candle. When it's moving up, when it's buying, is an uptrend, is buying, is bullish. Then this black candle for me is a bearish candle. If you don't understand, repeat this video and listen to it again. Watch and watch again. Now we are in a downtrend, just like I told you. This black candle is the bearish candle. It's in a downtrend. Now, this thing you see right here, remember I said it's a change of character like this, and it's also called break of structure. If you want to just in context of the downtrend, now this is a break of structure. But when you were on an uptrend and it changes, we call this change of character. So now we are in a downtrend. Sorry, a downtrend. Now take a look at this place. You see this expansion, it left imbalance, right? Now the last in a downtrend, the last bullish candle, remember I told you this white candle is my bullish candle. Anytime it's going up is the white candle. The last bullish candle before this thing comes down and breaks, before this impulsive move comes and break this structure, comes to break this structure, is another block. All right, is another block. Let me go again. The last bullish candle before that impulsive or move or expansion that I told you, impulsive move that now breaks this red line, breaks this structure here, is the other block. All right, so what do you do with another block? You pick this rectangle here. All right, pick this rectangle here. You make sure you cover the other block like this. Now we are expecting price to come here, move, to come back to this place, tap here and continue selling. All right, so I told you this is an impulsive move or expansion, so we want it to correct itself, come here, touch here, and keep selling. All right, so this is another block. This a what? A bearish order block. Now let me show you how to identify a bullish order block. So now let me show you something. As you can see clearly, this, all right, this was moving down in a downtrend. All right, before this changed everything, it changed the movement. So let me show you something. This was meant to be lower high, lower low, lower high, lower low, lower high, lower low. But you see what happened? It changed trend, and instead of coming down, it went up. And like I showed you there, the same happens for this place. This former lower high was taken. Look at this drawing I made. Let me change this to green so you can see it clearly and increase, right? So you see, this was how we were meant to move. Lower high, lower low, lower high, lower low, lower high, lower low. But when it made this lower low, it was supposed to make a lower high. This lower high is not meant to break this. Anytime you see it breaking this, it has changed trend. It's called a change of character. It was meant to go like this, all right? Lower low, lower high, then keep coming down. It's not, it might get up to this place, but it shouldn't break this lower high. Now it broke it. This red line, you can see, you will draw the red line on it, touching this bullish candle, this white candle. Remember, what do I call this? I call this change of character. And it changed character, focusing on this uptrend now is a break of structure. And remember, I told you, anytime there is an impulsive move like this, it will leave imbalance and another block. Let's find the imbalance. Now see, first block, second, third. Can you see the gap? This big gap here. That's an imbalance. It must be filled. And what did I say? I say in the downtrend, the last bullish candle. Let's see if we can go back there. The last white candle, which is the bullish candle before the red candle that made break this structure, is the bearish order block. Now in an uptrend, it will be the last bearish candle before this impulsive move upwards, that would be the bullish block. Now, where is it? Let me show you. This is black candle here. This was the black candle before this impulsive move that broke this lower high here. Look at it here. This black one here. So we draw it. This is a what? A bullish order block. Now let's move. We expected price to come here, tap here, and continue moving up. But it didn't tap. Why? I'll show you later. Now, in this scenario, see, it was meant to come up, go, then tap here before going down. It didn't tap. Why? I'll tell you. So this is the bullish block. This here is the bearish order block going down, and this here is the what? Bullish order block. There are different types of order block, but this is just what? The basic. So this is how to analyze basically. Remember, we're analyzing on a 1 minute time frame. Now let me show you why this didn't tap here. Let me show you something. Now when you analyze, you don't just use blocks alone. You use another tool called this box, this one here, called the Gann box, alright, or Fibonacci retracement tool. I use the both. Alright. So how do you use this tool? Now, this here, you simply target the last low, right? The last higher low. If we want to like in patterning to a bearish order block, right? You look for the last low before this other structure uptrend was taken. This is the last low. Then use this, right here. Check it. So now let's use this block. Let's use this box here called Gann box. That's what we'll use. So you tap on it, come here, then you take it down. It won't be like this for if you're just using it for the first time. So you click on this here, this 3 dotted line. Click on it. When you click on it, you scroll down, click on settings. Then for you, if you're opening this for the first time, all these boxes will be ticked. So you untick the rest and leave this 0, 5 and 0.5 and 1, and you move below. All these boxes here too will be ticked. So you untick all of them, right? When you untick this, then you click on these boxes here. Click on them, click on them, click on them. Change this color to black. Change this one to whatever color you want. For this case, I prefer blue. Change this one to black. So when you are done, click on OK, and this is what it looks like. Now click on that 3 dots again. I forgot to. Okay, so that's just basically what you do. 0, 0.5 and 1. Now this blue box here, we call it the premium zone. That's where you buy. This discount here, this black one here, we call it discount zone. Right now, when you are selling, you consider this one at the top here, this blue box. Then when you are buying, you are looking to buy, you consider this black. Let me show you how you use it. Now when you do this, we would not, instead of putting this short position, this thing here is used to look for your entry, your take profit level, and your stop loss level. So when you are selling, you use this short position. When you are buying, you use this long position. So we are selling, we'll be using short position. So if we were to just use this order block, we bring it here, tap on it. This green here is the level you want your trade to close in profit. And if trade goes against you, this red up here is where we want our trade to close with the small loss we have already prepared for. All right, now you see it did not touch it, it just went down. Now looking at this thing I told you here, this gun box, we want price to come down and come up to this blue shaded region. So instead of setting this thing to be here, starting it here, allowing this line to be the demarcation between this red and green, we make this one here to be the demarcation, this 0.5. So you just move this gun box to the side, move it. When you move it, no, bring it down a bit, move it like this. Then when you move it, you tap on this thing here, shift it, then bring it down. Wait. So you see, we bring it down here. So can you see? So if we had brought it down here, like this, wait a minute. If we had brought it down here like this, of course it will tap into this place and sell. We will make a lot of profit down here. But if you had followed this other block, just this other block, we will miss this trade. All right, so you see, with this you hardly miss trades. All right, so let's delete this here and see. So it went down and down, went down and down and down, right? So this is it, this was it. So this was it. This for a downtrend. This is for a bearish block. Now let's check this bullish block here. So you can see it did not mitigate. Coming down to touch this place is what they call mitigating. It did not mitigate this other block here. It just continued moving up. Why? Now in this scenario, you will do this. You use your gun box from this here, the last lower high, to this here, right? So I told you in the downtrend that this is called the premium zone and this is discount zone. When we are selling, we want price to come to this place and sell down. But when we are buying, you want price to come here to this zone and buy up. So instead of now we'll be using the long position. Instead of putting it here, we shift it up a bit. Move it up a bit. Then take it up. Alright. So we want it to stop here. Now this is 2. I will show you. Now you can see it didn't still mitigate. You see, this still mitigate. Let me show you the third thing to do to ensure that this thing mitigates by force. Now when you come, remember I told you when this thing makes an impulsive move up, it leaves this imbalance, right? Imbalance. This thing at the middle. Now you take this Fibonacci retracement tool, or you can use the gun box. Too. You target this top here. all right, to this place. Now let me make this clear to you. You might be asking why we did not come down. If you check down, you will see. Let me show you that thing before. If you check down, check here. You can see the same imbalance here, right? We didn't use that. You see this one here, we didn't use it. Why? Let me show you. Remember I said we'll be using discount zone. Sorry. Discount zone, right? Yes, we'll be using discount zone. But to ensure, this is another thing to use. To ensure you don't miss trades unnecessarily, all right? Let me take this trend line. Then you mark the middle. You mark the middle of this. Mark it. Let's take that one out. Let's take this one out. When you mark the middle, take it out. And when you take it out, take this one out too. Then move this to this place. When you move it like that, it's difficult, very difficult for you to miss trades just like that. Then you can either move your stop loss to this place or here. Right? So now let me show you something. When you take a look at this box, this thing you see at the middle here, 3.56, is there's what we call risk to reward. You are risking 1 to make 3. So if, for instance, if you are risking $10 on this trade, you are sure to make $30.56. All right. And this thing you see here, 22.4, 79.7, they are called pips. Pips used to calculate your losses. Those are the amount of the times the distance of price movement. These are pips. All right. Now, how do you now target where you want to take profit from? You target either, there's what we call liquidity. Liquidity is found in highs. Ensure you repeat this video if you are hearing this for the first time. Ensure you repeat this video. And lows, old highs and old lows, right? So this point here, this here is our liquidity. So our take profit will be around this place. All right. So you can see when it came here, when it got to this place,